This conference will now be recorded.
Hello, and welcome to Freddie Mac's Energy Efficiency Financing Breakout, where we'll be discussing what's the latest with GreenCHOICE mortgages. I'm James Cromartie, and I'm joined here today with Simone Beaty. Hi, Simone.
Hi, James. And both James and I are with the Freddie Mac Single Family Client and Community Engagement Team.
Freddie Mac also has energy efficiency efforts on the multifamily side, but today we're going to focus on single family. So, what are we going to talk about? We will start with a refresher on our mortgage offering, GreenCHOICE Mortgages. We actually presented GreenCHOICE at last year's RESNET conference. We'll get into the details of that a little bit later on. We will discuss the market adoption, what that looked like, and what we learned in our first year or so with the experience in the mortgages. And then we'll wrap up with a quick discussion of what to expect next as we go into 2021 and beyond with GreenCHOICE. So let's jump right into the refresher. We'll start with a small product overview. Generally, as most of you know, more than half of a household's energy consumption goes toward heating and cooling. And that's based on research done prior to the pandemic. Can you imagine what those numbers are now that we all work from home, we learn from home, we teach from home, or the majority of us anyway? Keep in mind that financing energy and water efficiency improvements is not really new to Freddie Mac, but with GreenCHOICE mortgages, it expands the options exponentially. Energy efficiency types of improvements help lower utility costs, make the home more comfortable, allowing it to be more affordable on a long-term basis. That's probably one of the reasons why this particular responsibility for the offering has been assigned to Simone and I, because we are also responsible for affordable lending. Originally, we thought we'd start with a test and learn kind of a pilot, where we would roll it out on a limited basis, but we saw the value and the kind of impact that this mortgage offering could make in the energy efficiency field, and we decided to roll it out to all Freddie Mac approved sellers. That's right, you heard me. Every fellow Freddie Mac seller has access to this GreenCHOICE mortgage option without pre-approval. So let's talk a little bit more about what you get with GreenCHOICE mortgages. This is a mortgage option for energy and water efficiency improvement, where you can do improvements up to 15% of the as completed value of the property. So keep that in mind. You can do as many as 15% of the as completed value of the property in upgrades. If the improvements are done with an aggregate cost exceeding $6,500, then we're going to need an energy audit or energy report. But keep in mind that $6,500 and below, no report is required. And that creates operational ease for our sellers. It also gives the homeowner a lot of flexibility in terms of making energy efficiency upgrades and improvements to their property. Another cool perk that we think that we know sellers appreciate is that with GreenCHOICE mortgages, we will award the seller a $500 credit when they deliver the mortgage to us. What else are we talking? Let's go to the next slide. Let's expand on the idea of the $6,500 in eligible improvements. We are finding that a lot of our customers like to stay at $6,500 and below because, again, there's no need for an energy audit, and that creates operational ease. Some may think that the homeowner will be limited in what they can do on the energy efficiency and water efficiency improvement front if they have to stay below $6,500. Well, our experience says otherwise. Some of the improvements that you can see that you could do, below this $6,500 mark would be programmable thermostats. Who among us does not like Nest thermostats? You could do caulking and water stripping, air sealing. You could do energy efficiency appliance and refrigerators, water heaters, air conditioning units, low flow water fixtures. List goes on, list goes on. Another awesome feature that we're finding with our lenders is that they also have the ability to finance multiple improvements, where all the improvements do not have to be energy or water efficiency improvements. That creates a ton of flexibility. And keep in mind, I want you to really get this, that the 6,500 level is for aggregate, all of the improvements. So you don't have to worry about, one single improvement at 6,500. As long as multiple improvements stay at or below that level, that energy report is not required. Let's take a look into the insights in mortgage performance. We were actually encouraged and validated by the energy efficiency white paper our research team did, and it was called Energy Efficiency, Value-Added Properties and Loan Performance. This is what we actually presented at last year's RESNET conference. We went into detail about the findings of this research. But what I'll do today is just to give you a few highlights, just in case you missed it. Well, we started with 2 rating metrics for evaluating rated and unrated properties. The first metric was RESNET, the Home Energy Rating System. That's the index by our very own RESNET. Almost all of the RESNET rated homes were at or below 2 years old or so. The second metric was by the Department of Energy, and it's called the Home Energy Score, HES. As a lot of you know, a lot of those homes were around 45 years old on average, if you will. And basically, well, before I go on to what we were looking for, we did these samples of homes between 2013 and 2017. And what we were looking for were the answers to 2 questions that are important to an investor like Freddie Mac. One, what is the house premium associated with energy efficiency? Basically, how much more is a home worth if you take into account energy efficiency? And the second question that was important to us was, what is the default risk associated with energy efficiency? That's very important to an investor like us, because we'd like to know, will the homeowner be more or less likely to default from their mortgage if they have a higher rated energy efficient home? So let's talk about our findings for a second. First, we found that rated homes sold for more than unrated homes. In fact, we're around 3% more than unrated homes. Another finding was that higher rated homes, better rated homes, sold for more than lesser rated homes. And the number there was around 3 to 5%. And one big finding was that mortgages backed by rated homes perform better in certain circumstances than unrated homes. Again, important for an investor. Why is this even important? It's important for several reasons. It's important to homeowners, it's important to investors, it's important to builders, even real estate professionals. It's important to a homeowner so that they can make sure that their home is rated and they can take full advantage of the appreciation, utility cost savings, and the comfort that these energy and water efficiencies provide. A home builder can also realize the value that they invested in putting these energy and water efficiency upgrades into their home. And again, the homeowner can do the same. And real estate professionals, hey guys, it's another selling point in closing a deal. The more selling points, the better in that business. Now I'm going to hand it over to Simone so she can talk a little bit more about the research, what Freddie Mac has used that research to do in terms of making decisions and moving forward. Simone?
Yeah, thank you, James. And thank you for going through that really great explanation about the research. Because now I'm going to actually talk about how did Freddie Mac leverage that research to provide even further value to the lending community in terms of the offering that we already had out in the market at the time. Well, in fact, certain analyses that we conducted in the research was actually instrumental in us being able to further enhance our refinance solution for GreenCHOICE after we released our product, or it became available to lenders in May of 2019. Later on that year, we actually strengthened our refinance to be able to provide a no cash out solution to the lending community where they could also take advantage of our low down payment solutions up to a whopping 97% LTV to essentially use the refinance portion to pay off energy and water related debt that was incurred prior to the origination of the mortgage, use the refinance to finance that debt into the first mortgage lien and get to a more affordable payment. The reason we were able to get to that conclusion on providing that refinance solution was because the research bore out for us that the mortgages do outperform in terms of a mortgage on a rated property, do outperform its non-rated counterparts in terms of mortgages securing non-rated properties. And when we isolated certain attributes, we started looking at things like LTV, and as James mentioned previously, the debt to income ratios. We realized when we isolated borrowers carrying a higher debt to income ratio actually outperform, if the home was rated on those mortgages, they outperform mortgages securing non-rated properties where they had similar high debt to income ratios on those loans. And because of that, it gave us the confidence we needed to be able to essentially change our refinance parameters and put a solution to the market that would have ordinarily have treated traditionally in the lending community as a cash out refinance. And the reason that is important is if we had relegated the payoff debt of debt as a cash out solution rather than a no cash out solution, that would mean for a lender and consumer higher fees to be able to originate and settle those loans, and it would have constrained the amount that could be financed in terms of the loan to value ratio. The consumer may have reduced essentially spending power to pay off that debt if it was treated as a cash out refinance. So the name of the game here is affordability. So we enable the product to have both a very robust purchase transaction to be had for a consumer, and then with the release of the enhancement in late 2019 for the no cash out refinance feature, now they also had a comprehensive refinance solution that made the payment affordable if they had debt that was unsecured, or they use cash, or they use essentially credit card to essentially do these home improvements to their home. And in addition to those enhancements, we also provided additional flexibility and clarification at that point in time to show the areas where we would not require energy report and further streamline the requirements as it relates to the installation of solar panels. So, as it relates to solar panels, let's talk about that a little bit more. So in terms of energy efficiency, solar panels are one of the most energy efficient installations a consumer can make in terms of home improvements to the home that are energy efficient. It's the one area where, for the most part, we see an efficiency ratings coming through on solar anywhere between 15 to 20% worth of efficiency on the home that's being provided in terms of utility usage. And from a consumer perspective, that can help a consumer save thousands of dollars over the life of the mortgage and also the life of the solar panel. And another interesting factoid with the solar panel installations is that a consumer will realize over time that they actually have saved money in terms of the expense. The savings of a solar installation will more always than likely, outpace the cost it took them to install the panel on their home. So in terms of cost effectiveness, when a lender is looking at an invoice from the consumer on looking at the cost of the panel, when they're looking at the savings of the expected life of the panel on the home versus the cost the consumer is trying to finance into the mortgage, that basically, is showing a value to consumer if it is revealing that the cost to install is essentially, outpaced by the amount of savings that they get in utility savings over the life of the panel. And so for that reason, we made a decision that as lenders are using this, product to finance the installation of the expense associated with the installation of the panel, that we will forego an energy report in those circumstances. And that could be very beneficial to the consumer, as if we're not asking the lender to take additional operational requirements and costs to call in an audit, those savings will also be passed through to the consumer in terms of the cost to originate the mortgage. So, there's savings with the cost of the installation of the solar panel in terms of utility savings. And then the other fun fact about the solar, having solar in a consumer's home, is that it's also, one of the areas where it reduces the carbon footprint in terms of overall environmental impact. So savings overall, and then we tried to make sure we provided, some flexibility to even further incentivize the lending community to support financing of expenses and debt associated with solar installations. So let's talk about what we saw. Over 2020, most of the transactions that we saw delivered to Freddie Mac was refinances. What we observed is, as we were providing the refinance solution in late 2019, we were actually entering already in an environment where interest rates were starting to get extremely low, and there, it was just in time for the refinance boom. So not only were most of the deliveries, over 90% of the deliveries we saw in the last year were refinances, a significant amount of them also happened to be for payoff of debt for solar expenses, and those were the solar installations. So in terms of product usage, we're definitely seeing, the lending community looking at the GreenCHOICE product in the right way and for the right usage in terms of financing solutions. So that is a good sign in terms of, how it can be used further in the future as well. Hopefully that trend continues. In terms of, the lending community and experience that we have seen on adoption, we are actually seeing increased usage on the GreenCHOICE mortgage product overall, simply because it has so many streamlined features for lenders and their operations that is, the ease of use is an attractive feature, because for lenders, unlike an ordinary, renovation activity, they don't need to set up as many operational requirements as they would had they, had a full-blown, comprehensive renovation activity that they would need to manage and support. The Freddie Mac product does not require, as James mentioned, a lender to have prior approval to use our product. We also do not require lenders to be in first, loss position and hold recourse on these mortgages, and we still provide for them a single close solution that saves the consumer money on the renovation in terms of how the mortgage is structured, where the lender can actually deliver the mortgage to Freddie Mac without even consumer have started the renovation activity, if that's how the consumer is deciding to use the financing. They also don't have to manage and set up and establish a separate bank account or custodial account to, manage the escrow funds. They can determine on their own how they want to manage the escrow account and establish it, and how they want to release the funds to the consumer. But the rules here are a lot more flexible than, a more comprehensive, full-bodied renovation product. And it really is to incentivize lenders that are working with consumers that have improvements that either are all energy efficient improvements that can fit within to a 15% of the as-is completed value in terms of the expenses they can wrap into the first mortgage, and not have to set up all of the operational requirements that would have been required on a full-blown, full-scale renovation activity. So primary uses of what we've seen in the lending community to date, as I've mentioned, a lot of it was refinance for paying off debt on energy efficient and water efficient installations. And a lot of that was for solar installations. Another activity that lenders found very attractive, and we have seen increased adoption because of it, is those improvements, for example, like updating the HVAC or appliances or insulation, to the extent that there were improvements that did not cross the aggregate cost of $6,500. That threshold was instrumental because it also eliminated the requirement for lenders to go out and wait for an energy audit to be completed on the home. In terms of the borrower benefits, I'm now going to turn it back over to James to show kind of the consumer impact as well.
Yeah, thanks, Simone. Let's take a look at Green Choice mortgages and what it means to the actual market. After all, that's what we're here to talk about today. We're here to talk about how we can bring value to the market, and the market is actually the consumers. First of all, we can all agree that installing energy and water efficiency improvements increase the comfort of your home and the affordability over time, because you're saving money on energy usage. And you're able to save that money doing a couple of things. A, by the actual consumption of energy, less consumption you're saving, and then by the fact that you are financing those improvements at lower interest rates using a lower interest rate financing instrument like a mortgage, especially in today's historic low interest rates. And you are financing those improvements over a longer term. We see many mortgages coming in financing in over an amortization period of 30 years. So just imagine doing your energy efficiency and water efficiency improvements, and then you're paying on them over a 30-year period. That's a tremendous cost savings and a fabulous way to manage your debt. Another piece that I think we could consider and reconsider actually is the fact that we are making the home more comfortable. We are giving borrowers a tool to respond to the times. As we said before, more of us are working from home, we're learning from home, we're teaching from home. And with this particular activity, we can do that in a cost-efficient manner. We know that there's a ton of refinance activity, and we've seen a ton of refinance activity with this product, but think about it from a first-time home buyer perspective. You have record low interest rates, and you're out searching for a home. You find the perfect neighborhood, you find a house that you kind of like, but with this particular mortgage option, you can actually buy that house. It's in the perfect location. You can make all the upgrades to make it your dream home. And then the kicker is you can make it energy efficient to make it more affordable and more comfortable over the life of your house. So first-time home buyers, real estate professionals, builders, this is a tool that you can actually promote and have them use to get that dream home that everyone needs. So I think next, yes, I'll kick it over to Simone for what to look for in 2021 and beyond.
All right, thank you, James. So let's talk about an eye on the future. So we released Green Choice Mortgage basically to make sure that we had an offering to the lending community to give them, a benefit of a home improvement product with an eye on, efficiency, both energy and water efficiency, to be included as part of a streamlined renovation product. And, we do incentivize, the lending community to use the product in that manner. One of the things that we are looking at is there is an opportunity to further fine-tune the data set that we can actually incorporate as part of the mortgage transaction to kind of realize with specificity what types of improvements are a lender, using the mortgage proceeds to finance. And so that color today is largely being kind of discovered as we kind of go through the, a review of the loan to determine via the appraisal and via the lender notes on here are the types of improvements that were included in the financing of the mortgage. But that's a very manual process in terms of discovery on determining, the energy efficient improvements that are actually used as part, financed as part of the transaction. What we would eventually want to move towards is a level of automation throughout the mortgage process, from kind of soup to nuts, from the beginning at the time of it's originated, going through the underwriting process, and also all the way through the delivery of the mortgage to Freddie Mac. A more, automated and specific way of teasing out the type of improvements that are coming through on the loan. And also, we want to do it not only through the kind of the mortgage process in terms of qualifying the borrower, but also as we look at, qualifying the property, are those same data elements showing up on the appraisal as the appraisal is looking at the approach to value on those items being in the home and attributing a specific value to them in terms of if the market is paying up for them. And as James demonstrated earlier in our analysis, we are seeing that the market is paying a premium for these items in the home to the extent that they are disclosed and they are aware of it. So in terms of standardization, automation, the industry as a whole, the investment community that might be looking for these loans on the secondary market, the industry as a whole would benefit from not only standardizing the data that we want to see, both on the appraisal side and also on the qualification side, but what it means to Freddie Mac down the road is that we could potentially tease out certain elements and certain improvements that were being done to the home to see what additional information analysis we can gather on the loan as it relates to mortgage performance and as it relates to the value of the property. And for the consumer, what that can mean is if we take additional steps to use that data based on performance characteristics, it could lead to Freddie Mac providing even more flexibility in the future that could open up even more qualification criteria that's to the consumer benefit if we're able to trend that information. So in terms of next steps, we have already started a joint, GSE activity to look at the data set that we can include as part of a larger appraisal redesign effort of attributes we want to include in the appraisal. Beyond the appraisal, we will also be looking at attributes that we think will also be meaningful as we look, for example, at our automated underwriting engine, as the lenders are using our engine to get approvals to determine whether a loan meets the investment quality for delivery to Freddie Mac. And as we are doing that, we definitely want to promote awareness, more awareness, with industry professionals. That also includes lenders. It includes, mortgage brokers and realtors, and any other consumer-facing industry professionals and energy efficiency advocates as well, of what we have to offer and where we're trying to go. So that piece is very exciting to us, especially as we see on the secondary market side there is definitely a groundswell of activity as more and more companies and investors, see religion in standing up, a governance within their organization, a sustainability activity with a lens on climate change. And so I think as we move towards standardization, that will provide more transparency, to the, market as a whole, that could facilitate even more growth of kind of mortgage financing in this space to support and facilitate more improvements and more new construction as well, in terms of having energy efficient improvements or items in the home. So with that, where can you find information on all of the things that you've heard in this session? To start with, we do have on our Freddie Mac webpage, if you want to learn more specifically about Green Choice mortgages, you can find that detail on our single family webpage at the link that you see on this slide. There we do have process flows, we have videos, we have links to tutorials, self-guided tutorials about the benefits of using the Green Choice mortgage solution for the lending community and anyone else that has an interest in learning more about our product. All available on the Freddie Mac single family website. As it relates to the information you heard earlier about the benefits of energy efficiency, the benefits of solar, if you want to deep dive into the full white paper on our analysis of what we found as we try to correlate the value of mortgage performance and the property valuation, you can also find that on our Freddie Mac website as well. We have done a lot of insight overall on energy efficiency, the value of efficiency, and the value of using mortgage financing to support and promote and facilitate more improvements to the home that include an efficiency component. And so all of that information can be found on our website that you can read at your leisure as you are looking to find more material and information and data around this topic. And that brings us to the conclusion of today's session. Thank you for taking the time today to actually listen to our presentation. If you're listening to the presentation and you find that you have questions on any of the content that you've seen or heard, here is our direct email addresses if you have any questions. James is listed on the screen as mine. We are definitely welcome and encouraging you to not only check out the information on Freddie Mac's website, but if you are interested in learning more about Green Choice or learning about the direction Freddie Mac is headed on our energy efficiency or water efficiency efforts, please reach out to us at the contacts you see on the screen. And on behalf of James and I, thank you once again for joining our session. And enjoy the conference.